Hey traders and investors, Serge Berger here. Today, let's have a look at utility stocks, which I do think are overextended here on the upside through the near to potentially intermediate term lens. First of all, let's understand that utilities have been the year-to-date outperformer, up nearly 13%. And in second place, you've got the basic material stocks up about 11%. Utilities, of course, have risen at least partially because yields continue to drop, so interest rates continue to remain very low in the U.S., and that tends to be somewhat bullish for utility stocks. So I do think that ultimately will continue, but I think it's the rate of change here on the upside that is likely going to have these utilities retrace lower, and that looks to be setting up a trade. Let's look at this on a daily chart. So again, here you can see that sharp rate of change higher basically since last December. We're seeing a lot of separation between price and these medium-term moving averages. You can see 50-day, 100-day, and 200-day very much lagging behind. Ultimately, you will tend to see some sort of a mean reversion move for these moving averages to catch up with price. Again, I'm not bearish in utilities, but I do think the rate of change to the upside is overdone, so there's a couple things we can do. First, though, before we look at the actual trade, let's get a little bit more perspective looking at a plain white chart. I'm going to make a weekly time frame here, and you can see basically what we've done here. We've had again a very sharp move, not unlike that move we saw in 2014, and from that perspective, this rate of change here, very similar to what we're seeing here, looks to be unsustainable at this rate. So far, we may be putting in somewhat of a double top for the near to intermediate term, which obviously looks something like this. So we're just now a couple of weeks ago got to the highs we last saw in January of 2015, so a little more than a year ago. And so it makes sense to have a bit of a pause here, have a bit of a pullback maybe, and then ultimately resume this trade, this trend higher for some time. Now let's go back to that daily chart and show you guys what I'm talking about here. So if we make this a daily chart, you can see that we've got a formation here that a lot of folks have probably heard of. It's purely technical stuff, but we've got a so-called head and shoulders formation that looks very familiar. And you can see we've got a left shoulder, a head, and a right shoulder here that is quite interesting, and arguably would get this utilities to start breaking low. If we look at the 8 and 21 day moving averages, you can see we've now broken below both of those. And from that perspective, I would say if we go back to those medium-term moving averages, the 50, 100, and 200 day yellow, blue, and red, I would think that if ultimately we start breaking below this neckline, then obviously the first support area becomes the 50-day. Again, this is more a reference point, but that could be a first stop. That's just a little bit lower. Ultimately, I would think that we need to see somewhat of a more meaningful retracement, which gets this closer into the mid 40s. The utilities. So again, there's a couple of ways one can do this. One can go literally outright short utilities. One can just stay out of it, take profits if you were long, and then look to buy on the dip. Alternatively, if you want to do something in the options market, the implied volatility on utilities is very low, so maybe you can buy some puts. So a couple of different options here on utilities that are quite likely here overbought. I hope this makes sense, guys. Please like the video. That would help me a great deal to you move up in the YouTube ranks. And as always, I will see you guys in the next video.